Yeah, I just wanted to bring this chart up before we go, because with that narrative, we've got some technical indicators doing just that. And if we bring up what's happening with Brent crude here, we can see how we're entering a golden cross. That is when the 50-day moving average climbs above the 200-day moving average. So that fits in with his, I suppose, synopsis in his outlook.
Yeah, so how high, Mr. Fesharaki?
I think the prices can go by the end of the year easily to 75.80. And they could go higher. The mathematics of the numbers are clear that if the U.S. actually does what it says it's going to do, then the prices will go higher.
The thing is, we have, of course, shale, which has acted as a bit of a cap. Why do you believe that that may not be the case? Or do you still believe that even at 75, we have then the crude still being, I guess, backed up by shale as well, but shale in a sort of sweet spot?
Yes, I think once you have the prices above $60 for WTI, we are at $60 today, and if we are at 75.80, WTI would be $65 to $70. Once you're above $60, then shale is coming by its own force. It is not going to be impacted by what happens to the U.S. policies towards Iran or Venezuela. It is a private sector move, and once you're above 60, pretty much everybody makes money in the whole space. So people will go gangbusters anyway. But will the production growth be as dramatic in the past for our near-term future? I don't think so. I think the supply will grow 800,000 barrels per day to 1 million barrels per day. And over the next few years, the growth is going to be slowing down because of the resource base and because of the decline rates. It is not going to be impacted so much by the price of oil. As long as we're above 60, be pretty clear.
Mr. Fesharaki, we're hearing more on the geopolitical front with the U.S. increasing military pressure on Iran with more military moves. There's talk of more sanctions now. Do you think the market has priced in these geopolitical tensions now? Has that been factored in? Or do you see potential more upside?
I think the market has not priced it in. The potential for the upside is huge. We are now increasing the probability of military conflict between Iran and the U.S. to 50%. We had it before at 20%. We've raised it to 50%. So I think that once a bullet is fired and once some bombing takes place, the prices will go through the roof. It has not been priced in.
But we won't know, I guess, until we're actually there. In terms of just your simple projection, sir, of
absolutely.
How much the drawdown will be on Iranian exports. We're currently at about 1.25 million. How low does that get? Can that get down to zero as well?
I think zero probably unlikely, because the Iranians are able to smuggle about 250,000 barrels per day pretty much, and they're doing it now. They're able to do it. So it's not going to go to zero. It is unclear whether some of the Chinese companies such as Genrong, which has been in the past on the U.S. sanctions list, that come off. It may again go back on the U.S. sanction list. They do no business except buying Iranian oil as a middleman. They could buy 200,000 barrels per day. I don't think any of the publicly traded companies or government companies with the international operation will go against the U.S. sanctions. So I would say some between 250 to 500,000 barrels per day would be the minimum volume for the Iranian exports. So we'll lose about 800,000 barrels per day from where we are today.
Right. So, I mean, of course, the end user is the person who's going to get in trouble as well. And with that in mind, who are the end users, and are they big enough fish not to be fried?
I don't think so. I think that the price of oil goes up. It makes a lot of people very happy, not only the oil exporters and the oil companies, but a lot of environmentalists, all the renewable energy people will also be happy. Higher oil prices also kills the oil demand over the longer term much faster. So a lot of people have interest in seeing high oil prices, which are not necessarily among those who actually make money from it.
When it comes to supply, though, I mean, we're talking about the market is already tight already, and demand has been firm. But I'm just wondering, when it comes to OPEC, are they doing enough? Can they do enough to actually fill this shortfall from Iran now?
Well, that's a good question you ask, because people often ask if the Iranian shortfall comes, can, for example, the Saudis replace it? The answer is yes, it can. But that is not the right question, I think. The question is that if the Saudis replace the Iranian crude, how much spare capacity is left in the market for any eventuality? And that is, I think, the key factor. If we have a spare capacity below 2 million barrels per day, we will end up having very volatile prices upwards. And if the Saudis replace the Iranian crude with the help of the colleagues in UAE and Kuwait, it can be done, but the spare capacity will be so thin that any kind of development in Libya or in Venezuela can send the prices through the roof. So it is really the issue of how much spare capacity will be left after Iran is replaced, and what degrees of freedom the U.S. will have in dealing with Venezuela.
Mr. Fesharaki, well, the thing is that it's not just OPEC, it's OPEC plus, isn't it? And where is Russia with this? Is Russia on board, in your view? Because there have been cracks developing within this alliance, if you want to call it that.
Yes, well, the Russians had committed to cut 228,000 barrels per day. They haven't cut still as much. They are close, but not there. And actually, the Russians don't matter. The 228 doesn't matter. If they are not there, the Saudis can replace it right away. It is the psychological impact of a big, grand coalition between OPEC and non-OPEC, which is very important. So the Russians are the leader of non-OPEC, and Saudis are the leader of OPEC. This is, I think, what matters most, not so much the actual numbers.
Final question for you, Mr. Fesharaki. What do you think then would be that the spare capacity in case Saudi and friends step in and fill the Iranian void? Would that be, what, 1% of demand, 1.5%?
It would be less than 2 million barrels per day, 1.5 million barrels per day total worldwide if you stretch everything. Remembering that the Saudis' effective capacity is only 11 million barrels per day, so they can replace it. But the U.S. secondary sanctions in Venezuela cannot go into effect. All the things that the U.S. wants to do against Venezuela cannot happen because it's not possible to do Iran and Venezuela at the same time and ask the Saudis to make it up.